Good afternoon, everyone. It's Pablo, Zuanic, Cannabis Analyst at Zuanic and Associates. Thank you for joining us today. We have a three-person panel to discuss the start of recreational sales in Ohio. We have Trent Woloveck, Chief Strategy Director at Jushi. Trent, welcome.
Good afternoon, Pablo. Thanks for having me.
And we have Jeremy Unruh, SVP Public and Regulatory Affairs at PharmaCann. Jeremy, welcome.
Hi, thank you.
And look, Eric Offenberger, CEO of Vext Science, should be joining shortly, but we're going to start and go ahead here. So, Trent, I'll start with you. First, just an introduction about Jushi and about Jushi's operations in Ohio, and remind people the type of license that you have there. Thank you.
Yeah, so, Jushi is a publicly traded, vertically integrated in 5 markets, operate in 7 total markets, with a really main focus in Pennsylvania and Virginia. In Ohio, where we're vertically integrated, we have a level 2 grow, manufacturing facility, and currently 1 operational store down in Cincinnati, Ohio. And so as it stands right now, we're eagerly waiting for our application to do dual use tomorrow, and then we will be awarded 1 additional store with our level 2 grow. And that's where we're at right now in the market.
Thank you, Trent, and thank you, Eric, for joining us. Jeremy, go ahead, make an introduction about your company, please.
Yeah, absolutely. PharmaCann is one of, if not the, it kind of depends on how you measure it, right? Largest privately held cannabis companies in the United States. We operate in 8 states, kind of starting in Colorado and moving through Illinois, Michigan, Ohio, Pennsylvania, Maryland, Massachusetts, and New York on the east side. We've got 8 production facilities in those states, and about 60 dispensaries in those states. In Ohio specifically, we were one of the inaugural licensees, both in our level 1 cultivator license, our processing license, and those are housed in a production facility in Buckeye Lake, which is on I-70, about 30 miles or so east of Columbus. And then we have 3 dispensaries. We have 1 in western Ohio in Wapakoneta, and we have 2 in southern Ohio. Like Jushi, we have 1 in the Cincinnati metropolitan area and 1 in Hillsborough. And yeah, so we're looking forward to Ohio. And so far it seems to be fairly clean as the transition in various states, the continuum continues to be laid out.
That's right. Yeah, Wapakoneta. I was trying to get the pronunciation right there. That's good. Eric, welcome, and please an introduction about Vext Science and about your operations in Ohio.
All right, thank you, Pablo. Thanks for having us. Vext started in Arizona and was one of the originals in Arizona, and did JVs and started with Ohio. And we identified Ohio about 5 years ago with the partnership, and really liked it and thought it was going to turn out to be really good. And we're excited about it, where Ohio is. So we're primarily in 2 states, vertical in both. A little bit smaller, but we like to think that we have nice exposure and nice upside on Ohio. We have a cultivation tier 1 in Ohio. We have 2 retail operations, 1 in Columbus, 1 in Jackson, that we consolidate. We have 2 that are under LOIs. That's in Athens and Jeffersonville. And we have a manufacturing facility there. We've been open since 2020, and we got the cultivation up and going in late 2023. So we're pretty excited about the Ohio operation and the thing. And obviously we're excited about the 10Bs too coming out, Pablo. So
sure,
we think that it's just going to be a great state for everybody.
That's right. Thank you. So look, we have a lot to cover. Hopefully, I'm also looking at the questions on the Twitter from Spaces, right? We will try to go through all those questions. People have also sent questions by email. The format of these calls is that I ask most of the questions, right? But also we do our best to take all the questions that are sent by email or in the spaces. Trent, just in terms of housekeeping here, just to get some things straight, factual questions, please describe for us each type of license level in the state, whether it's 1 and 2, vertical and non-vertical, how they work, and how they will be grandfathered into rec, if at all. And also just a reminder of how many more licenses might be issued as part of this process. Thanks.
Yeah, so let's start with the cultivation side. That's pretty straightforward. There's a level 1 and a level 2. The difference there is how much square footage you can actually grow. And those are expanding, once regs are finalized in adult use. And so one was 50,000. I think they get bumped up to 75,000. Both Jeremy and Eric can probably tell you better than that. And then we get bumped up to 15 for level 2s. As a level 2, we're guaranteed 1 additional store since we're vertical, as well as the level 1s get 3 additional retail since they're vertical. If you're a processor, which is a totally separate license, you get grandfathered in. And then if you're a retailer, you get to be both medical and adult use. But if you're a standalone retail, you also get a +1 store. That's where it stands as of right now. There's some legislation that's been filed that could possibly move, probably not until later in the year, if at all, which would expand it a little bit more. But as of right now, we're operating under what was passed in the ballot initiative. As far as additional stores go, I think you'll see at least a double, so another 100 to 150 stores with the flip to adult use, with the additional retail stores that are going to be awarded through a licensing process. It's a ping pong ball kind of ranking stores 1 through 3. And then you get assigned and get to pick based on where your ping pong ball shakes out. We think that'll all come to fruition sometime in September of this year for your additional stores. But I think tomorrow the rumor is that the application will come out for both those stores as well as your dual stores to be hopefully flipped sometime middle to end of this month for sales.
All right, thanks. Jeremy, and again, I know that these type of questions, some of them are supposed to be factual because the regulations are set in stone, although some things are still perhaps not clear in terms of how things play out over the next few months. So Jeremy, a few questions for you about the application process for incumbents, right?
Yeah.
Supposedly the application process opens tomorrow. We've heard that it's already open. How soon do they get back to you in terms of whether the application is successful or not to collocate? Is it really a 3-month period? Is it a 1-day period? And if you can, as you answer that, try to differentiate in terms of applications to collocate rec in your medical stores and versus applications for your future new stores, right? And also if you can elaborate in terms of how the lottery system will work, particularly in 2 aspects. One, can you choose a location, right? Like I suppose not many people want to be right next to Michigan. So just keeping that in mind. Thanks.
Yeah. So the way I think about the licensing process is basically three tranches of licenses. The first 2 are for the incumbents, and the third one is for the kind of the new entrants, the new predominantly social equity entrants. And so the way that the licensing works, that first tranche is for the existing medical dispensaries to essentially validate that they are ready to serve adult use consumers. And so we think that's going to be a very light touch application, meaning just a page or 2 of pretty high level information, more of a registration, and that will be turned around, we think, in the DCC, the regulators being a little bit cagey about giving particular dates as to when that dual use application will be turned around, but they're committing to approving them on a rolling basis, meaning as they come in, they're going to start approving them. They're also going to prioritize the cultivation and processing and testing applications. So those would be for the existing medical cultivators, processors, and testing labs to then serve the adult use market, so that they can start to build up that supply chain, because you can't really engage in adult use activity until you get your certificate of operation or your stamp of approval from the regulator, and then they'll start doing it. I think they'll do it, and they'll start to turn them around in a week. A couple days probably is a little bit light, because you're supposed to essentially attest that your point of sale systems are going to be able to accommodate adult use consumers, and they're also requiring this meeting with sort of your largest shareholder or your CEO. That's a little bit vague too, but that's likely to be a virtual meeting that they have. So I suspect they'll turn them around, and we're kind of thinking maybe 2 weeks is when they'll turn around those dual use licenses. So that's the first tranche. Then you move into that secondary site, which is for operators who are familiar with bringing these operations to fruition. They understand the real estate ground game. They have security vendors. They've done this in other states, or they've done this in Ohio, and so they have some experience in ramping these facilities up. That's the theory behind allowing these incumbents to have a secondary site. We also call those the 10B sites. And so all of that process for the 10B licenses, which is the secondary site, is all premised on the fact that there is a 1 mile buffer between retail locations, right? So when you plant your flag in the ground, nobody else can locate within a mile of that. So you have to figure out who gets to plant their flag in the ground first, and then who gets to plant their flag in the ground second, and then third, and then fourth, and then fifth. And so what they will effectively, and I'm paraphrasing this a little bit, what they will effectively do is they will take an application submission from everybody who is entitled to participate in the 2 phases of that secondary site application process, right? They're not going to ask you for your site right away. All they're going to do is say, okay, do you have a level 1 cultivator? Do you have a level 2 cultivator? Or do you have a dispensary? Because if so, then you are entitled to 1, 2, or 3 of these secondary site dispensaries. And then what they're going to do is they're going to hold a lottery, and it's the Ohio Lottery Agency will randomize all these, and then they're going to rank everybody from 1 to roughly what, Trent, 200 or thereabouts, and that's going to be your number through these 2 phases of the secondary site. And then they're going to say, okay, now that we've ranked all of these licensees in their order and given them a number, now submit to us an application that has your first choice of site, your second choice of site, and a third choice if you want. And then in the phase 1 of this secondary site application process, you can choose anywhere in the state that's suitable, right? That's zoned appropriately, that you can secure site control over, and that doesn't violate a kind of a higher lottery pick. And so they're going to start to go down for that phase 1. They're going to start to go down the list. And so lottery ball 1 is going to get their first location, and then lottery ball 2 is going to get their first location. Oh, but if that first location is within a mile of the first pick, then they go to the second pick, then they go to the third pick, and there'll be a slight cure period, and then they're just going to start running down the list until they get through that first sort of round of statewide allocations for these licenses. There'll be a short cure period, and then they'll go into phase 2, and they'll use the same lottery ranking for phase 2. And what they'll do is they'll say, okay, now we're going to give you, the state's going to give out regions. They're going to identify regions where maybe there are dispensary deserts, or maybe that there are a lot of towns that opt out, or a lot of towns that don't opt out. And then you're going to be able to select a choice for your kind of first, second, and third locations in those regions. And then they're going to use that same ranking, and they're just going to start going down the list and allocating dispensary locations from that list. And then the third tranche will be the new social equity applicants that will be allowed to be the new entrants in the marketplace.
Jeremy,
I don't know if I covered all your questions.
No, that's good. That's very thorough, but I'll just stay with you there for 1 second. In terms of the, the 3-month period, June 7th to September 7th, that's only for the applications to co-locate, right? But for your new stores, is there a timetable set in stone for that?
So they're supposed to get, so that 3-month window is the window in which they are supposed to run these processes and award these licenses. So that September date is like the last date that they're supposed to have the licenses awarded by then in all of these processes. So could theoretically does the state have the authority to take until what, September 7th or whatever that date is in September to give out the dual use licenses? They could. But that's not consistent with what the governor's been saying and with what the superintendent of the DCC has been saying, which is, listen, we don't want to create a situation like New York where we decriminalized cannabis, but we didn't set up a functioning commercial structure for it, and we gave this space for illicit operators to set up shop. And so they're very much like trying to rip the Band-Aid off of this to make sure that that space doesn't exist. So that's why I don't really think that 3-month period is a traditional government 3-month period where they wait to the very last day and do it at the very last minute. I think that they're going to try to accelerate this to the extent they can. But that lottery process it's complicated, and it requires a lot of sort of circling around to go through these choices and then cure it and then go through the next choices. So
understood. So Eric, just to be clear here, based on what Trent and Jeremy said, it seems that a lot of things are set in stone, but there's also other things that are being proposed, right? New rules that are being proposed. Maybe if you can elaborate on that. Do you agree that everything is clear and set in stone, or are some things still up in the air? But besides that, I hear that there's new rules that are being proposed that maybe won't interfere with the start of a program because, in theory, everything is set in stone. But maybe you can also talk about what are those new rules that are being proposed, if any. Thanks.
From our perspective, we're supposed to see the application tomorrow morning primarily for the existing. The 10B is you can start tomorrow, but it's up through the 14th. So we think most people will file that are wanting the dual use license, and they'll try to get going. I concur with the other gentleman that we don't think it'll be a long drawn out process, but we haven't seen the actual application. We've just seen kind of the structure of it is all that's been out so far. As far as like the rules and that, the rules are going to be, I think the state's rules are fairly set in stone. It's always a matter of how do they implement it and how do they interpret that rule, right? So that I don't think we know until we get going through the process, and that lottery is going to be the one that I think is going to be the most interesting for us. That's going to switch dynamics, and then then we'll enter into the zoning issues and the next phase of this thing. But from our basic, Pablo, is it's a government and it's going to flip, and we're going to have to be fluid with it. So we don't really get too worked up about it right now. We've done it enough times. It doesn't really matter.
Eric, I'll just stay with you there. I mean, based on your experience in Arizona, just a quick answer on is this clearer than in Arizona, moving faster than in Arizona? Just from what I know, more than 2 years ago, more than 2 years ago now.
Yeah, no, from Arizona's standpoint, Arizona went really quick. It was kind of shocking to us how fast that went. So we think Ohio's drawn out a little bit more. They had that typical legislation where they were bickering of which way they were going to do it and stuff like that. But I do think the gentleman that's handling the DCC and what the governor's been saying and stuff along those lines, that they recognize some of the problems other states have had dragging this out too long, that they don't want to have that mess. So I do think they'll get going at it relatively fast. And he wants an orderly system, and he seems to be a professional from what we can tell.
Right. Thank you. So look, we want to move on now to make projections about the market, how quickly it may ramp. But Jeremy, maybe first, if we look at what we have right now in terms of the medical market, why is it less developed than Pennsylvania? Because many times we try to, people talk about, well, the market will double, will quadruple, compared to Maryland before reg, compared to Pennsylvania. Ohio is a lot less developed in terms of, consumption. of medical cannabis. What would be the reason for that, in your opinion?
Well, I think there's a couple factors, and I think the primary one is sort of, kind of clear. It's just a more nascent marketplace than Pennsylvania is, and it didn't contemplate nearly as many storefronts as Pennsylvania did too. And then you get into the clunkiness of sort of the Generation 1 regs that all of which kind of played into some challenges. Like I think of, this is a good example. Like, Ohio was the only state that wouldn't measure weed in eighths, right? Right. And although you wouldn't think that drives a patient away or doesn't attract a patient, it's just representative of a lot of the unnecessary rigidities, I think, that Ohio's sort of early days of medical had. And when you don't get that uptick kind of immediately, it plays out over time. It plays out over time. That curve is kind of smoother, right? So I think that's generally it. You also have, Michigan as a very mature adult use border state that siphons a lot of, maybe what would be medical demand, off. And then, what we didn't have 5 years ago, we do have now, which is the incursion from hemp-derived intoxicating products that can be sold, or that are being sold. Whether they can be or not is an argument, but that are being sold, in gas stations and bodegas without age gating, and et cetera, et cetera. So, and those are significant drains to a contemporary market.
For sure. Trent, moving on to your estimates about how quickly demand ramps for rec in Ohio. Where are we in 3 months' time, 1 year out, in terms of, let's call it, total sales, right? I think the market right now, medical, is around $500 million, give or take. What are you basing your estimates on? And as you talk about that, your best estimate of the number of stores in the state by end of 2025, and how quickly capacity ramps, right? You talked about level 1 and level 2 licenses. Do people have the funds to expand? Are we going to be very tight on capacity initially? If you can touch on that. Thanks.
Yeah, sure. So, recent news just came out that the state up north of Ohio, I'm from Ohio, so I don't say the name, but Michigan, became, the largest regulated state for cannabis. And so, look, a lot of people are from Ohio, drive up there and purchase cannabis. We had a store, in East St. Louis in Illinois, where people were coming over from Missouri. And so we know what that looks like for what happens when a medical market flips to adult use. You're going to see a lot of pain in Michigan. I think that's something that a lot of people don't talk about, quite frankly. And so in a market where I think there's like 170 to 180,000 patients, with, roughly, let's call it 12, 13 million people in Ohio. Look, that's relatively low, about 1.5% of total population. And so I think you're going to see a big boom come pretty quick. I know some folks have stranded capacity there. For Jushi, we're going to go from a 10,000 square foot facility with 3,000 square feet of canopy up to 15,000 pretty quick. We own that piece of property free and clear. We'll leverage that to build out and bring on capacity. I'm sure a lot of additional folks will find capital to do that, because you're talking about $1.5 billion to a $2 billion market pretty quickly. Now it takes time to ramp up. We've been starved for capital and cannabis as a whole for about the last 3 years. I think it's like 1,265 days, but I'm not really counting. So, I think that flips quite quickly with, rescheduling happening. We're hearing, safer being worked into stuff at the federal level. And so with my favorite thing, the THCA flower loophole getting closed, the hemp farm bill loophole getting closed, all those are going to be huge positives for the industry to start seeing capital flow back in. And so I think you'll see the market ramp up relatively quick. I think you'll see, you know, a 3x pretty easily to the marketplace, if not a 4x over, you know, the next, let's call it 12 to 18 months. And then you're off to the races. A lot of people like to consume cannabis in the state of Ohio. There's not much else to do, quite frankly, besides tip cows and watch sports. So we're really excited about where the market's going.
Thanks for that, Eric. Same question. Your best projections for the state of Ohio in terms of reg sales, and particularly, you know, number of stores at the end of 2025. Your best estimate, Eric. Thanks.
I think the number of stores are somewhere just south of 300, probably in the 275 range by the time they get done, and the social equity and everything along those lines. You know, again, last one on the comment, but yeah, I said I think everybody's on spot on. I think Ohio will go relatively quick. The patience being low, having been there for a while, and all of us have been there for a while, it's been really interesting to watch that. And I think it was different than what we thought. We thought it'd be a little bit more robust, but I do think it'll go fast. Supply will be tight. Companies will try to expand. I like the fact that they have some type of limits on the cultivation so that we don't end up with an overproduction issue and start deteriorating the market and doing all those nasty things happening in that marketplace. I think Ohio's taken a lot of steps to prevent that. And I think the consumer ultimately will benefit because of that. I think they'll have a better program. So, you know, I think it's 1.5 to 2 billion also by the time it gets done in the next 12 to 18 months. And I think it stays steady on a per store basis. I don't think we see the deterioration there.
And Eric, do we have a sense of you know, the number of towns that are opting in or that are still opting out?
You know, my in-house counsel that does a lot of the real estate, he's got a better list than I do. I think there's about 5 or 6 that he said he's pretty sure they're going to opt out. I'm sure you'll see probably some similar zoning there, Pablo, like you have in other areas where they'll take the medical adult use dual license and maybe, you know, shy away from the strictly recreational license. So, but we haven't experienced it in towns we're targeting.
But my point, and again, maybe it's too detailed, but I mean, Trent, sorry, jump in, but I guess the question is, you know, could we have a situation of someone that has a level 1 license, or anyone, right, that they want to collocate, but then the town says, well, no reg stores here. Trent?
They're not actually allowed to do that.
Okay.
So they have to let you open and operate. Now they can the city can come back, or the jurisdiction can come back and say no dice, and then they have to let you move. And so, you know, Jeremy knows that one all too well from the Illinois days. A lot of us have battle scars, and we've learned from that. And so, you know, we did a good job as an industry working through that sticky issue sometimes on local jurisdictions and the transition to adult use. And so that's a very important point to where people won't get locked out right off the bat. The state's not actually allowed to do that.
Right. That's great. And of course, look, I mean, I'll go back to Eric, but Trent, I guess for you, given that you brought it up, and then when you move to the next phase, right, of going to a lottery for the next stores, obviously at that point, you know, whatever you put in the lottery, it's based on the towns that are opting in. Obviously, you're not going to put a ping pong ball for a town that has opted out, or you won't have line of sight on that.
Yeah. So there's a bunch of jurisdictions. You know, we got like 5 locations locked up for this ping pong ball process that Jeremy walked through. Yeah, look, there's quite a few jurisdictions that have opted out, and you're just not going to go in, and or they kind of whittled it down to you know, a few select locations that meet zoning requirements. And so that 1 mile buffer is something that's, you know, going to be super interesting to kind of watch how that knocks out certain locations from other locations that people have lined up when, you see the shakeout of where you rank from the ping pong ball perspective.
Understood.
Exactly. And just to tie on to exactly what Trent's saying and what he's getting at is there will be an interesting dynamic that takes place as soon as those rankings come out, and as soon as people start to understand where other real estate is, and like a lower ranking group that has a really awesome piece of real estate that sees a higher ranking group with not such a good, piece of real estate, but competing from a buffer perspective, there's going to be an aftermarket for these. Like that lower group is going to go to that higher group and say, hey, listen, we've got a better location. We're going to monetize this some way, somehow, and flip that property to you. So there will be this mad scramble once those lottery balls, once people know where the rankings are, and once it starts to become clear where the sites are, there will be this mad scramble of an aftermarket to flip those properties back and forth, which is kind of an interesting dynamic that takes place.
When does that ranking come out?
There's a date. It's what is the date?
You have until the 14th to put in your application. I don't think we've seen the exact date, have we, of when they're going to pull the first balls?
I don't know.
Right. Okay.
I thought it was going to be maybe shortly thereafter.
It's not a long time, but yeah.
Okay. No, that's good. So look, let's move on.
He's hit it spot on. The trading will be interesting on this one, Pablo. I think it's going to be pretty interesting.
Right.
Here we go. Blah, blah. Applications due, license drawing June 21st of 2024.
Okay.
Got it. That's good. I definitely want to touch on. Go on, Jeremy. Go on. Sorry.
Oh, and then site selection is July 1st for phase 1, and site selection is late July 2024. So
right.
That's going to be that June 21st to July 1st, and kind of right thereafter. That's when that scramble takes place.
Right. And I definitely want to touch on the M&A side of things, especially that. On my math, the MSOs, I think, are about maybe a third of the market there, right? I'm surprised we haven't seen a lot of M&A activity. I mean, Eric is one of the few that has been able to pull a deal there recently. But let's move the discussion now. Eric, talk about your store locations, your capacity, more detail. Discuss where you are. How attractive are your locations? Near the border states, competition nearby, urban versus rural. And then also, if you can, talk about your expansion plans based on your license. Can you add more stores and talk about capacity? I know we touched on that, but just a bit more detail, Eric. Let's start with you. Thank you.
Yeah. So we have the store in Columbus. We have the store in Athens, which is a university town. Obviously Columbus is the capital, large population. We have a store in Jeffersonville, which is somewhat of a suburb outside of Columbus. There's a Honda manufacturing battery plant going in that area. And then we have the Jackson store. We don't have a problem with more rural stores. We like to be about 2.5 hours away from our manufacturing facility. We think it makes the distribution a lot easier in the market, especially for that type of a market. So our general store plan will be within that 2.5 hour radius of the cultivation manufacturing facility, which is in Jackson. That's our target radius for Ohio. We don't have a problem being by the West Virginia or Kentucky border. We're like everybody else. We want to stay away from Michigan and Pennsylvania, but that's pretty much the stragy. Love to bump up right against Indiana too. So
what about capacity?
Get there within 2 miles.
Capacity, you're level 1. You have a lot of room there to expand capacity. How quickly can you expand capacity? How are you going to fund that? Can you talk about that?
Yeah, level 1. When we built the facility, we have an option to buy it. So we've done that like on the property, like they talked earlier. But it has the capability of going up to 100,000 feet under canopy on a single flight. So we don't have to do double stacks or anything like that. We built it modular. It was an old mushroom plant for Campbell's soup years and years ago, and it's modular. So most of like the fertigation and stuff is set already with the plumbing and building, so we can go ahead and add on. We just have to do the HVAC. So we think the expansion is relatively easy, and we'll we're in process of getting the permit to be able to do the additional 25 to take it to 50. But we'll go gradual with it. We don't want to be in a situation where we're too dependent on the wholesale market. We like to be able to maintain as much vertical as we can because we've seen it get destroyed in other markets, and we're just cautious that way from a capital. Yeah, we'll be able to fund it, whether it's through cash flow, existing shareholder base, that type of thing. This is how we usually fund growth.
Understood. Thank you, Eric. Jeremy, the same set of questions for you in terms of if you can discuss your store locations, capacity, and expansion plans. Thank you.
Sure. So ours are, like I said earlier, Wapakoneta, which is Eastern Ohio, Hillsboro, Southern Ohio, Cincinnati, Southern Ohio. And the Cincinnati store is you'd call it an urban store, currently a big patient base, and in a township that is very, very supportive of the work we're doing. And so are the other two communities. And I think that there are kind of the usual strategies. We call that, Kentucky, Indiana border. That's the exit one strategy, right? You want to be exit one there if possible. And, and so when we are lining up our ping pong balls, so to speak, or going out and securing sites for this lottery process, we're trying to find some exit one. We're trying to find a couple urban locations, and Ohio is almost uniquely situated in that it's got a lot of pretty large, pretty small cities. It's got a lot of small cities or a lot of really big towns, however you want to say it, in Dayton and Toledo and Cleveland and Cincinnati and Columbus, etc. And so there's a lot of that sort of urban opportunity out there too. But I think another thing to think about, especially in the first maybe 3 year, kind of serving the market for the first 3 years, and any, that kind of first to market piece is really, really meaningful in a transitional state. Like, you want that, you want to capture that. And I think serving the hole in the middle of the donut of opt-out towns is a tremendous opportunity. And I last week I was in a town that was just about to pass a moratorium because everybody else around us passed a moratorium. We don't really know what's going on. And I was like, you realize everybody around you has passed a moratorium. And if you were to locate a retail location there, just the pro rata math suggests that you might make about $500,000 a year in tax revenue. And your annual budget is about $560,000. So you're almost going to double that if you decide to host a dispensary, right? And so I think that finding that hole in the middle of the donut is an opportunity as well.
That's great. Trent, same question for you. Your current expansion plans in Ohio.
Yeah, so we have our one retail location in Eastern Cincinnati. It's the exit one kind of strategy. That's right off of 275, which is the highway that circles Cincinnati. And we're right over the Ohio River there, and literally right off the exit. So that'll be a really good store. I tend to agree with Jeremy. I like to be the one retail store in the cannabis desert of towns or jurisdictions that opt out. So we have identified a few of those locations for our +1, and then we'll be able to ramp up M&A to get to probably 6 stores. Max is 8 from our understanding. And then with our 15,000 square feet that we can expand to, we like to do double stack cultivation. So we'll be able to get to 15,000 square feet, then double stack it. So, kind of effectively being able to serve kind of that 6 stores with, about 50% sell through, 55% of our own products through our stores. And then have a small wholesale footprint with partners that we work across the country with. So that's kind of the strategy for Jushi, which, for us, doing about, $55-60 million of run rate EBITDA, we can kind of ramp that up relatively quick with our expansion in Ohio. That's kind of like our 1A a option for M&A and non-organic growth.
Thank you. Trent, I'll stay with you. Let's move the discussion now to M&A. Like I was saying before, right, from my perspective, not a lot of activity, ahead of rec compared to what we've seen in other states. If you can, what is the reason for that? Are the caps firm? Meaning, can you buy more licenses? An operator with a level 1 license, could have 8 stores eventually. Could they buy another level 1 license? Are there restrictions on flipping? How quickly can people flip licenses? And strategically, does it make sense for potential buyers to wait right now until we have more clarity on the ranking and those type of things? You would think that some incumbents, private companies will have funding issues, so they may not be able to expand. This may be the time for them to sell. Just your overall views on M&A and how that colors your plans there.
Yeah. So, where to start on all that, but I still think you're seeing depressed equity values for the pubcos. And so there's a little bit of a delta between what a private buyer wants for an operational store versus what my multiple is pubco. So that makes it a little difficult to buy an operational store. There's a lot of, paper licenses that are out there floating around that I think we have a pretty good sense for where the market's pegged at. There's level 1 growers that just want to be product producers and not run retail. And there's a lot of retailers that are independent that, like you said, are tight on capital, that don't have expansion capabilities. And so I think that's kind of where you'll see the M&A start to pick up once you see where your +1s or +3s, your ping pong balls shake out. You'll start to see that kind of thaw the M&A market on where and what people start pulling the trigger on. There kind of needs to be a mark on that. And then as far as, a level 1 buying another cultivation facility, that's not possible. So in Ohio, you can only have 1 cultivation license, 1 manufacturing license. And as it stands right now, 8 stores. Now, if legislation passes, that can always, change that. But that's kind of the working assumption as it stands, today. And, this is cannabis after all, so things can change at a drop of a dime. But that's kind of the rules we're playing on right now.
Thank you. And Eric, same question for you. Your views on the M&A environment. And of course, congratulations to Vext Science, right? Here you are mostly a single state operator, Arizona. You've been able to close a few deals in Ohio. I hear a number of companies would like to be doing deals there right now, but they haven't been able. So you guys have. So congratulations on that. But again, your overall views on the M&A environment in the state and how it plays out. Thanks.
We think that we will get to 8. We're pretty confident in that. So we'll max it out. We'll max out the cultivation. We'll max out the store. And as discussed, we'll try to sell as much vertical as we can and support the wholesale where it makes sense. I think M&A in Ohio, I think people will start to look at it. I'm not so sure that the individual operators right now are that inclined to sell because the market's down and where's the capital coming from. And that I think they'll try to ramp up on the rec and think they're going to get a better multiple in that. So I think the M&A is going to be somebody buying a paper license that gets a ping pong ball and says, well, I've got 6 stores. I'm capable of operating the 6 stores or feeding the 6 stores. I've got a license. Let me sell it. And you might see some of that, and some other groups maximize up to 8. I think that's what will happen is you'll see people max up to 8, and 65 to 70% of the market will be with operators that have 8. And then you'll have some with 1 or 2 here or there, and that'll end up being the market. I think the real M&A opportunity on Ohio is going to be is depending on a company that maybe has more of an East Coast presence or something that's looking to expand, or somebody that has a nice balance sheet, depending on how the adult use or the rescheduling goes and safe banking and all that, Pablo. I think that's going to be really where somebody looks, because they're going to look at those assets on that balance sheet and go, this has got a good cash flow. If we put some capital into this, now we have something to try to work on a fragmented market. So I think cannabis has gone through round one. Most industries that have done these roll-ups, whether it's automotive,
I think the last part we lost you
waste
there.
management or whatever. Oh, I'm sorry. Can you hear me now?
Jeremy, can I?
Yeah, I heard
Can
him.
I
I'm
move on
sorry
to you?
about that.
Can we hear you?
Okay,
Yeah.
sorry about that. Can you hear me?
All right.
Can you hear me?
Yeah, we had you.
Yeah, we got you.
Okay, sorry about that. But anyway, I think we're getting ready for phase two in this industry. So I think once we get to that, it'll be like other industries. This will be a different consolidation type of thing. And that's where I think somebody will look at Ohio and say, that's a stable market. It's a good anchor. It's got good cash flow. And I think they'll want assets in that market to be part of that next level of M&A activity. So it could be a good nucleus catalyst for somebody.
No, thank you. Look, for those of you listening in Spaces, we are reading your questions and we will bring them up. But Jeremy, just staying on the same subject, if we can talk about your views on the M&A environment, I'm going to read you some stats here before you answer, Jeremy. Of the 9 public MSOs, right? Obviously, PharmaCann is an MSO, but private. I was looking at there's 6 MSOs that have level 1 licenses of 23 in total, right? So 6 of 23 are public MSOs. And the level 2, there's 14 level 2 licenses, of which 3 are public MSOs, right? So when I looked at the numbers, it seemed to me like, wow, there's a lot of, small mom and pop shops, smaller operators there. But it seems that there are some bigger, what I would call regional companies or regional MSOs or like yourself, large multi-state operators that are also on those licenses, right? So we know the name of the licensees, but to me, sometimes it's not straightforward, like who are really mom and pop shops and who are like bigger companies, right? You have Ethos, Theory Wellness and others that operate in other states. But again, your view on the M&A environment, but particularly in terms of what are really the viable assets, right? It seems to me that a lot of them are regional or state operators or multi-state operators that may not be looking to flip so quickly. But your thoughts on that? Yeah.
Yeah, so I'm a regulatory guy, so I'm not as much of a finance and M&A guy as my colleagues here, and I thought their comments were insightful. From our perspective, I don't know, so we will be eligible to have 6. So we've got 3, and then we'll have 3 more as a level 1 cultivator in that 10B process. And so that means that we're eligible for 2 more. And I think that we very much, want to, what we say, cap up in Ohio. But I don't know that we're going to do it for a while, because we're just, we've got 3 brand new dispensaries by operation of law that we should be sinking money into instead of running around trying to purchase others. And so I think that with the awarding of these new licenses and perhaps other licenses, and then 24 months later, the state will start to review, well, gosh, do we need to do, issue additional licenses? I think that those paper license opportunities will come up pretty readily. But to your point, I think that Ohio has a very healthy balance of sort of locally or homegrown operators who did very, very well in the original medical cannabis licensing process. And then you had some of the out-of-state folks who were doing well in these processes as they were rolling east, Illinois, and then Pennsylvania, or Maryland, and then Pennsylvania phase 1, then Ohio, and then I think Pennsylvania phase 2, et cetera. And so they picked up some assets there. I think the Ohio operators like their little fiefdom. I think they do a pretty good job. And while we may be getting to the point here in the next 2 or 3 years where they're tired, right? That's kind of what happens with the homegrown folks. They get tired and they're like, I want to throw the keys to somebody else and I want to go play with my kids a little bit more. Maybe that will help influence that. But, I think that they've got a healthy little thing going in Ohio. So I don't really know where the M&A will go. But those are my thoughts when you ask the question.
No, that's good. Thank you, Jeremy. So look, I mean, I'm gonna just read some questions here from the Spaces side. And again, we appreciate to all the panelists the time here spent. I know we're almost closing on 1 hour. I'll throw a question and whoever wants to answer. Someone is asking, how bad is the hemp derivatives issue in Ohio, and if you can compare that with some of the neighboring states, whether it's Michigan or Illinois. Who wants to take a crack at that? Jeremy?
Well, I think hemp is you know, a 10 to 20% drag on the market for sure, and it's only getting worse as what I call hempsters, and I don't mean that to necessarily be derisive, but it's just quick and easy. You know, as hempsters get more and more comfortable in places like Colorado, where they have safe harbor rules or laws that say that, well, you can make these hemp-derived intoxicating products. You just can't sell them in Colorado, but you can sell them anywhere else you want to sell them. And so I think that you are you're seeing folks get more comfortable with that, and I think that just sort of adds fuel to the fire. I think you see distributors getting more comfortable sending those products into gas stations and into, you know, traditional retail spaces, so they're becoming more accessible. You know, so I think it's a big deal.
Thank you. Trent, another question for you or whoever wants to answer. For the 10B licenses, can they be transferred to a separate legal entity under common ownership after being issued? That's very technical, but I don't know if anyone has an answer for that. I can do it again. For the 10B licenses, can they be transferred to a separate legal entity under common ownership after being issued?
I'm not an attorney, but my understanding is it can be. So yes, you can buy a piece of paper license at the discretion of you know, whenever you want to buy it. It just can't put you over the cap.
Right. Another question, how is the social equity program going to play out? I think that there are also some rights for veterans, but Jeremy, do you have any insights on that in terms of the social equity program?
I know that what's supposed to happen is that the Ohio Department of Development is supposed to create a cannabis social equity and jobs program, and then that third tranche of licenses that is to be awarded is they're coming up with a level 3 cultivator, which I presume is a smaller cap than the level 2s, 1, 2, 3, and then 50 dispensary or retail licenses will then be issued, and the folks that are participants in the entrepreneurs that are participants in the Cannabis Social Equity and Jobs Program will have a preference, presumably a scoring preference, some way, somehow. But we haven't seen that yet because the Department of Development hasn't come out with that I'm familiar with. And I would also say, like, this is a brand new agency that is not a primary jurisdictional agency for cannabis oversight, and those secondary agencies sometimes are like, we're not really sure what to do with cannabis and how this works. And so I think that the state needs to work pretty hard to lean on the Department of Development to really get that program out and vetted so that people can understand what those opportunities are for the social equity entrepreneurs that want to be in the space.
Right. Thank you. Look, one more question from the spaces here. I want to read. Someone says there are many I don't know if this is true, but someone says there are many rumors that the regulators have been very late to issue the new rules on packaging. So a lot of people feel that very little adult use product will be available for sale on opening day. Is there any truth to this?
From my perspective, I hear it's going to follow the medical guidelines, you know, that the recreational patient's going to follow the medical guidelines. So my assumption would be the packaging would be the same, other than the receipt when the person leaves would not have the medical license IDs on it. So I don't see that as a hang-up, the way it's going to work. I think by the time they get to September, they'll have, you know, changed the rules around a little bit, but I don't see that as a hang-up. Maybe the other gentleman knows something different.
I concur with that. And I'd also add, you know, this regulator has been probably one of the best regulators,
Agreed.
business regulators that I've ever talked to and regulated cannabis since 2009, quite frankly. And so I don't think they are trying to drag their feet. You know, Governor DeWine is also not going to let people drag their feet because he understands and wants to ensure that Ohio doesn't turn into New York. And so I think you're going to see, you know, the marketplace happen relatively quick and
Thank you.
seamlessly.
Thank you, Trent. Look, I know we've taken almost an hour here, so we want to move to closing remarks. I'll start with you, Eric. Maybe as you close here, Eric, remind people about why people should be buying your stock, right? Maybe talk about the impact of Ohio, potential impact of Ohio on your company's financials, but just closing remarks. And again, thank you to everyone for joining us today. But Eric, I'll start with you.
Well, thank you, and thanks for having me, and I appreciate the opportunity. From our perspective, we think that Vext has the most exposure upward to Ohio. We think we'll be maxed out in Ohio with what we have. We'll be at 7. Good capital structure, good people, good team members in Ohio, and we've been there. So from our perspective, we're excited about Ohio, and we think that the opportunities are really good. And you know, we're operators. You know, we're not. There's nothing really that creative or sexy about Vext other than we operate and we perform in tough consumer markets like Arizona, and so as the other companies that are on here, I'm familiar with them too. They perform well. They're good operators, and that's one of the things we do like about Ohio. I will say this, Pablo, is you touched on it, that the people that are regional, and some of the people talked about it too, they are very operational. They're very dedicated to their business, their market. They, you know, it's not somebody that's trying to make a quick dime and flip it. So they run a good business, and it's good competition in Ohio. We do like that. That market's clean, good participation.
Yeah, great point. Thank you, Eric. Jeremy, closing remarks, and maybe just a reminder for people about, you know, if you can contrast Ohio with your footprint, right, with some of the other states in your portfolio. Thank you.
Well, it's not going to be New York. It's not going to be New York, but it could be a lot like I think the transition that we're seeing is sort of Maryland-esque, but I think the market is going to look a lot like Illinois at the end of the day. I really do. Sort of allocation of the assets across the state, relatively rigidly regulated state, and I think that they'll be able to sort of keep the values as well as the tax revenues buoyed, unlike other markets where it's sort of, you know, kind of gone down and continued to compress pretty rapidly. I don't think it will compress as rapidly as other markets, and so I really think it's going to look a lot like Illinois at the end of the day.
Oh, that's great. Thank you. And thank you, Jeremy, for joining us today. Trent, closing remarks.
Yeah, I think, you know, Jushi continues to perform and execute. We went from practically a 0 EBITDA company to, you know, continued growth. We're now, you know, in the low 20s from an EBITDA as a % of revenue. Ohio's only going to be a continued boon for us. What was a drag in, you know, spend and operations with the cultivation manufacturing is going to be a lift. I think we see, you know, a $7 million store flip to, you know, 15 to 20, no problem. That all drops, you know, straight to our EBITDA, because you don't really have any more fixed costs. You have a little additional variable cost by hiring more people, but it's practically all the same. And so all that just drops to the bottom line. And look, we, you know, have 2 more markets that are still medical that need to transition to adult use in Pennsylvania and Virginia. Those are, you know, coming fast and furious, definitely Pennsylvania. And so, you know, we have, you know, continued to say our M&A focus is going to be in Ohio. And an easy way to add 20 to 30 million bucks of additional EBITDA dollars for us. And, you know, our big maturity is at the end of this year. You know, we're going to get that one done and dusted before the end of the year, and we'll be off to the races. So we're excited about where things are shaking out in a bunch of different markets at the state level, And then, rescheduling is a big boon for everybody. That's coming fast and furious, and, safe and taking care of the loopholes in hemp are also going to be big lifts. So we couldn't be more bullish about Ohio. We couldn't be more bullish about cannabis. And so all of us in the public markets are, at a screaming deal right now. And so we look forward to seeing where that takes us over the next 12, 18, 24 months.
Great. Thank you very much to all the three panelists here. Thank you for joining us, and to everyone that joined in Zoom or Spaces. Also, thank you. We'd like to get through all your questions. So everyone have a good day. And again, thanks. And I guess go Ohio. Go Buckeyes. Huh?
Go Bucks. OH.
Thanks. Bye.